Good morning. Welcome to all of you. Glad you could make it, or glad you're watching this later. So we have a snow day today. We are going to cover content. We have no learning catalytics today. I do have a couple questions embedded in the lecture today, but they are not for credit. We don't have learning catalytics started. It won't be started. There will be no grade for today put into my accounting lab. It's just a skip day. And there is no video feed today because of bandwidth requirements. I'm completely on wireless. I don't have enough bandwidth to do video and the PowerPoint. So just a quick note, I got to snowshoe yesterday for the first time, so that was pretty fun. And I'm probably going to do it late this afternoon as well. So we're going to get started. Again, like any other day, Haley is in the chat room, and she is available for any questions you might have. Today you will notice that it takes longer to change slides for me, and that is simply a function of me being on wireless as opposed to when I'm wired in the classroom. So starting with exam 1 next week, it is Monday. It is available Monday, February 9th through Wednesday, February 11th. You have to start at no later than 4 p.m. on Wednesday, February 11th. There's exam information in Blackboard, and the last 20 minutes or so of today's class, I'm going to talk about the exam. I will ask that you don't ask questions in the chat room about the exam until I go over the exam information, because it can quickly get overwhelming, and then there's a lot of distracting information going on. So we will talk about the exam today. We'll talk about it in about the last 20 minutes of class or so. Now, what's due? This week is a little unusual since we have an exam next week. We have the Chapter 3 homework that's due this week. I will be sending out some video links Wednesday afternoon or so for homework problems we don't get through in class, especially with not having class today in person. Our coverage will be a little bit lighter because I want to cover the exam fully both today and Wednesday. So today we have homework. This week we have homework for Chapter 3 due, and then there is an exam information quiz on my accounting lab. That exam information quiz is available starting today at 11 a.m. It is due Saturday. It is in my accounting lab. It's just a few quick questions, multiple choice type questions about the exam setup. There is a third thing. It is not due Saturday, but it's out there, so I wanted to mention it. There is a practice exam in my accounting lab, and that practice exam counts as a quiz. It's listed as a quiz, and it's due by the time the exam is due. So it's due, let's say Wednesday night at 9 p.m. is when it's due. Just picking a time out. Well, 4 p.m. It's due 4 p.m. I have it on the screen. Okay, so that practice exam 1 is due February 11th at 4 p.m. It's meant for you to take it before you take the exam, so you have an indication of how you'll do on the exam. And we'll talk more about that when I talk about the exam. So once again, we have, the last 20 minutes of class today, I am going to be talking about the exam. So hold off on any questions about the exam until that time. Okay, so I guess we're ready to get started on this chapter. There are 3 really basic fundamental chapters in the book, and Chapter 3 is the third one of those. So the information that we've covered in Chapters 1, 2, and 3, and we are covering in 3, is fundamental to the course. And this chapter, I think, is probably one of the more challenging chapters because it does feel kind of weird, and we'll try to get through that as best we can. So definitely give this chapter a very close reading, and then definitely practice the material. So this is about accrual accounting and accrual income, the accrual basis of accounting. And basically, our first learning objective is talking about how accrual accounting differs from cash basis accounting. So we have this new term, accrual accounting. Just to give you a heads up, accrual accounting is used by probably all but the very, very smallest businesses. Most businesses are required to use accrual accounting. So cash basis accounting is typically only going to be okay for an individual or for a very, very small operation that's not covered by generally accepted accounting principles. When we talk about accrual accounting, if you download the PowerPoint, you will see several slides. I'm only going to talk about one right now, but you'll see several slides that have delineate the difference between accrual accounting and cash basis accounting. And I just want to hit on some of the high points here. Again, I would certainly download the PowerPoints from Blackboard and read this section carefully in your book. Cash basis accounting means you only write accounting entries when cash is involved. Cash basis accounting, it wouldn't record debts you owe. Like, let's say you go out and get office supplies and you say, I'll pay you later. You're not going to record that until you actually pay. So that's a liability that's not going to show on your book. So that's just one example, but it's huge. It results in incomplete financial statements that don't reflect reality, and it can only be used by the very, very, very smallest of businesses. Okay, the accrual accounting records the impact of transactions when they occur. Accrual accounting has accounts receivable and accounts payable. Cash basis accounting does not. There is no accounts payable. There is no accounts receivable under cash basis. Accrual accounting is required by generally accepted accounting principles, and the rule about accrual accounting is you record revenue when you earn it and expenses when you incur them. And that seems fairly obvious. When you look at it, you say, well, of course I'll record revenue when I earn it. But here's an example of what we're talking about. Let's say you're a doctor and you treat a patient, and you treat the patient on March 1st. You don't get payment from the insurance company until May. So do you record the revenue in March when you deliver the service, or do you record the revenue in May when you get paid? And the answer is March. You record the revenue when you earn it. So revenue is when you deliver the product or when you perform the service. That is the rule on revenue recognition. The rule on expense recognition is that you record the expense when you incur it, not when you pay it. So if you go purchase something on account, and let's say you have an event for your employees, a holiday party, and you have it catered. And so you have a $1,000 catering bill. You're not going to pay it till next month. But because you had the holiday party, you used the catering service, it was used up, that's an expense. You record it now, not when you pay it. And I know you could be thinking, well, we've got cash that has to be paid out. So you will record the cash. We're going to see in this week about how you record when you incur the expense and then later when you pay it. You have entries on both sides. Cash basis accounting, it records only cash transactions. So cash basis accounting, really easy, because you look at a transaction and you say, is cash involved? And if the answer is no, you don't record it. You only record cash. So that's kind of an interesting thing. So that's the basic fundamental differences between accrual accounting, cash basis accounting. We are doing accrual accounting in this class for the rest of the semester, unless we'll do a few exercises during this chapter that highlight the difference between cash basis and accrual basis. But unless told otherwise, we're using accrual basis accounting because it's what companies have to use and what they do indeed use. And again, if you download the PowerPoint from Blackboard, there's a few slides right in a row that give some important differences between the two, so you may want those for your notes. What we're going to do now is I'm going to go through an example, and this is a very, very simplistic example of the difference between cash basis accounting and accrual basis accounting. And I will tell you right now, Yes, I did the artwork, and I know you'll know immediately why I'm in accounting and not art, but I think it'll serve its purpose. Okay, so this is my little graphic novel of the difference between accrual accounting and cash basis accounting. We have two people at the top. In May, a customer prepays 3 months of lawn care for $600. So we have Lawnmower Guy, operates a lawn care service. And the customer in May says, I want you to mow my grass for June, July, and August. Okay, sounds good. So Lawnmower Guy, this is in May, Lawnmower Guy gets $600. Now, in June, Lawnmower Guy has to pay $50 for mower rental. In July, Lawnmower Guy has to pay $50 for lawnmower rental. And in August, Lawnmower Guy needs to pay $50 for lawnmower rental. Those are the facts of our situation. So we have 4 amounts of money in this case. We have the $600 that was paid in cash in May. We have June, July, and August. Each month, Lawnmower Guy has to pay $50 for mower rental. Okay? Those are when cash changes hands. What we're going to do now is we're going to talk through the accounting for that on a cash basis, and then we're going to talk through the accounting for that on an accrual basis. This is meant to be an extreme example, but I think it will serve to show you why the two are different. Okay, so our facts, $600 received in May, the actual mowing is done in June, July, and August, and mower rental has to be paid each of those months. So let's start with cash basis. So let's start with cash basis accounting. Cash basis accounting, we have the $600 revenue coming in May. We have a $50 expense coming in June. We have a $50 expense in July. And we have a $50 expense in August. Those are our cash flows. So nothing's changed. This is just looking at the calendar. Okay. So let's see on a cash basis our income for each month. Our income for each month. In May, we're going to have net income of $600 because we've received $600 of cash. In June, Mower Guy will have $50 expense for paying for the mower rental. In July, Mower Guy will have a net loss of $50 because he had to pay for a mower rental expense. And August, we had Mower Guy has a net loss of $50 again because he had an expense in August of $50. Under the cash basis of accounting, we only record things when cash is involved. So let's look at then Mower Guy. Look what's happened here. In May, when Mower Guy didn't do any work, didn't perform any services, Mower Guy got $600. But then in June, July, and August, when he was actually mowing, he's showing a net loss each month. So if we were using this, if we were looking at this, we would say, well, don't do what you're doing in June, July, and August because you're losing money. So the signal would be, Mower Guy, don't mow, just do what you do in May. Well, if all you do is collect money from customers and never deliver services, you're going to be in quite a lot of trouble, and that won't go on. So cash basis accounting can be very misleading because you don't see actually what's going on. You don't write, in cash basis accounting, you only record entries if cash is involved. But you can see there is a problem because we're recognizing revenue in a month when we didn't work, but then we show net losses for 3 months where we did work. So that wraps up cash basis. Now we're going to take those same facts and do accrual accounting. Accrual accounting, what we're going to see, same set of facts, that $600 of revenue, what we're going to see happen here is we're going to split that $600 up into 3 months because Mower Guy is mowing over 3 months. So it's basically $200 in each month. So we're going to take the 600, divide by the 3 months, and we're going to put $200 of revenue in each month. So then what that means is we'll have net income of $150 per month. So we're taking the $600 of what we called revenue under cash basis and putting it in the months in which we earn it. So we will show net income of $150 in June. We will show net income of $150 in July and net income of $150 in August as well. What we see then is and zero net income in May because we didn't do any work in May. That $600, by the way, that is unearned revenue when we collect it under accrual accounting. And we talked last week about unearned revenue. That's a liability. The customer gives us money. We haven't performed the service yet, so that's going to be a liability to us until we earn it. So when we're looking at our mower guy situation then, under cash basis, which is in the left, we show net income of $600 in May, but we show net loss in June, July, and August of $50 in each month. Notice a loss has parentheses around it. The parentheses is a signal that this is a loss. I put it in red just for emphasis. The red, typically we don't, you can use color. It's not standard across the board. So then in May, under accrual accounting, in May, we have net income of 0 because we didn't perform any services in May. In June, July, and August, we have net income of the $150. So under accrual accounting, which is the right-hand column, that's a better representation of what happened there because we actually earned income in June, July, and August. We actually earned revenue. We didn't earn any in May. All we did was collect from the customer. So that was my basic introduction to cash basis versus accrual accounting. And sometimes it feels really weird as we go forward and see more examples of it. But just trust me on this. We'll do it and we'll get used to it. It'll come in time. So what we're going to do now is we're going to do a couple of homework problems, and we'll see this in play. Okay. So the first one we're going to do is short exercise 3-1. Short exercise 3-1, we have Southeast Corporation made sales of $825 million during 2014. Of this amount, Southeast collected cash for all but $27 million. The company's cost of goods sold was $225 million, and all other expenses for the year totaled $325 million. Also, during 2014, Southeast paid $350 million for its inventory and $225 million for everything else. Beginning cash was $75 million. So notice that the millions, we don't have those zeros going, so don't put them in. So you'll do this homework problem, don't put the 6 zeros in because they're given to us. So we're asked 2 questions. What's net income? And B, what was their cash balance? So they're basically asking in A, what's accrual accounting net income? And B is basically saying, what happened with cash? So those are 2 very different questions. The first one, how much was Southeast net income for 2014? Well, their net income for 2014, something to remember that you should know right away on any question is net income is revenues minus expenses. You can also have plus gains minus losses. Gains are like revenue, losses are like expenses. But at its most fundamental level, you have revenues minus expenses. This exercise is more a function of interpreting the vocabulary and watching for those little nuances that make things cash or not cash. So let's start at this beginning here. Southeast Corporation made sales of $825 million. Okay, they made sales, and that's what we want. We are not looking, it was the next sentence of this amount, Southeast collected cash for all but $27 million. Well, for accrual accounting, we don't care about cash. We don't care, that doesn't make it revenue or not. When it says we made sales, that's our revenue. So we would have revenue, in calculating net income now, we would have sales revenue of $825. And again, we're dropping the zeros. Okay, now we have to pick out expenses. The company's cost of goods sold was $225 million. Okay, now cost of goods sold is an expense. Cost of goods sold is many times a company's largest expense. It's the first one listed if we do have cost of goods sold, it's the first one listed. So cost of goods sold is one of the only expense accounts that doesn't say the word expense. And I'm putting brackets around it just to show right here that we're deducting it. If we were doing an income statement, it would not have parentheses around it. I'm just showing as a learning tool. Next up, it says all other expenses for the year totaled $325 million. And, okay, for whatever reason, okay. So what I'm going to do is I'm going to take sales revenue minus cost of goods sold minus all other expenses gives us net income of $245. And again, on an income statement, I would not have those parentheses around cost of goods sold or all other expenses, but I'm showing them here to show you how we're getting to the net income. That's part A. So part A was basically saying what's our net income, and implied there is on an accrual basis. Now the next question says how much was our cash balance at the end. Now our cash balance, if you think about your own situation, how much cash do I have at the end? If I start a month, how much cash do I have at the end of the month? Well, how I find that is I take what I started the month with, plus what cash I got during the month, minus what cash I paid out. That gives me ending cash. So this shouldn't even count as an equation, because it's if you want to figure out how much cash you have at the end of the month and you know what you started with, you could take what you spent and then what you got, and you would end up with your ending cash. It's that same thing. So there's nothing magic about this formula. I'm just labeling numbers. But what we do need to know, do now, is pick the cash out in the problem. And this is where you have to read carefully, because just one or two words can make the difference. And this is good exercise. Reading carefully is extremely important for business in general, not even just accounting. But you can sign a contract and one or two words can make a huge difference. So reading carefully and being able to interpret it is just a good life skill. Let's get started on this one then. We're going to go through and look for beginning cash. Well, beginning cash was given to me in the second to last sentence. It said beginning cash was $75 million. Now, next up, what we collected. So we have to look for how much cash we collected. Now, reading the second sentence, it says, of this amount, Southeast collected cash for all but $27 million. Okay, well, sales were $825 million. They collected cash for all of that except $27 million. So to get our collections, we would take the $825 minus the $27 million. So they're basically telling us that we collected cash for $798 million. That's the sales we made less the part that was not cash. Okay. Now, next up, we're looking at the payments. Okay. Now, the payment, we have to look, typically you're going to look for the word paid, some version of paid. It says also during 2014, Southeast paid $350 million for inventory and $255 million for everything else. Okay, so we're going to take that payments for inventory of $350 payments for everything else of 255 gives us ending cash of 263. And I put the brackets around the payments just so you could remember that we subtract out what we paid out. So our ending cash is 263. If we were doing cash basis accounting, we would say that our cash income is 263. On cash basis accounting, you only record something if it is in cash. Everybody okay with this so far? Can I go on? We're still writing. That's 268. I don't think so, John. Is it 75? I mean, 75 plus 798. Are any of the numbers wrong? Okay, which number do I need to correct? Oh, I see the 5. Okay, I can do that. There we go. Thank you. Okay. We good to go now, everybody? Okay, great. Next up, we're going to do another homework problem, and I'm keeping my eye on the time because I want to make sure we have adequate time to talk about the exam, but we're still a ways off here. We've still got plenty of time. Next up, we're going to do short exercise 3-2. And this is another one of interpreting what's cash and what's not. This one, it says that we have Westwood Corporation beginning 2014 owing notes payable of $4.7 million. During the year, they borrowed $1.7 million on notes payable and paid off $1.6 million from prior years. Interest expense for the year was $0.6 million, including $0.2 million of interest payable accrued. So this is not a hard one. It's not much math at all, just some simple addition or subtraction. It tells us millions, so we're going to leave all those zeros off. And we're going to just dig in and talk about what these different numbers are. So this is just interpreting what's given to us. The first one, income statement for 2014, what's our interest expense? It tells us in the problem that interest expense for the year was $0.6 million, including $0.2 million of interest payable accrued. So our interest expense is going to be $0.6 million. That's it. So that's really easy. It's just going through, picking out what that is. So you kind of have to wade through all the numbers you're given to pick out that which is relevant. Notes payable. Next up, we have part 2. Notes payable, we're looking at notes payable is that's what we owe. So what's the balance of what we owe? Well, we began the year owing $4.7 million. We borrowed another $1.7 million, and we paid off $1.6 million. So that's just being able to calculate what we owe at the end of the year. So what we'll see is we began with $4.7 million. We borrowed $1.7 million. And we paid off $1.6 million. So all those numbers are relevant. So we take what we started with, add what we borrowed, subtract what we paid off, it gives us $4.8 million. And then finally, the last item here, interest payable. Interest payable, it's saying how much interest do we owe at the end of the year. Well, reading that, we have $0.2 million of interest payable accrued at the end of the year. So that answer is going to be $0.2 million. So that was just a very, very quick, short exercise that gives us practice in interpreting the information that we're given. Now, we are going to do a question not using Learning Catalytics. I just want to stop, want to talk for a minute about it, so I'm going to put it up there, and I'm going to pause for a minute. This is not in Learning Catalytics. It would have been had we had class today in person, but it's not. So I do want to pause, though, and I want you, in your own mind, you don't need to type it in the chat room or anything. Actually, Haley, why don't we could administer this? No, let's not do that. Just in your own mind, see what you would get for this. An expense incurred in 2011 is not paid until 2012. Using the accrual basis of accounting, the expense should appear on what? The 2011 income statement, the 2012 income statement, neither of those, or both of those. I'm going to pause for a few seconds. I want you to pick an answer in your head, commit to an answer, because then we're going to talk about what the right answer is, and it might surprise you. Historically, a lot of people get this wrong because it is so early in the process. An expense incurred in 2011 is not paid till 2012. So let me put an example on this as we go through this. Let's say, again, back to the catering. Let's say in December our company gets catering for a holiday party for $1,000, and so we have the holiday party, we've incurred the catering expense, but we actually don't have to pay the caterer until January because it's on account and we pay within 30 days. So would we show that catering expense in 2011 when we had the party, or 2012 when we pay it? And we are referring to the expense. And the answer there is 2011. And historically, a lot of people will not guess that. And let me talk this through. So when we have the party and we have catering expense, we are going to have the catering expense in December when we have the party and use the catering. At that time, we will have catering expense, and we will have a payable. We'll accrue that expense to say, okay, on our income statement for December 2011, we will have catering expense, and we will show the liability because we owe the caterers now. So then when January comes along, and this is now 2012, and we pay the catering bill, what we're going to be doing is we're going to be using cash to pay it, and the other side of the cash transaction in 2012 will be payables or accounts payable or liabilities. So the expense associated with the catering will occur in 2011 because it's when we incurred the expense, not necessarily when we paid for it. Okay, now if this were cash basis, which is not being asked, but if it were cash basis, we would not record the catering expense till January 2012. So anyways, the answer there, we always recognize revenue and expense when they're earned or incurred. And we're going to get some more practice with that with the next learning objective as well. Okay, let's go on here. So learning objective 2, again, this is another one that there's several slides. I'm not going to read them, but there are several slides on Blackboard. It would be good because those are some of the main points. Exhibit 3.1 in your textbook, this is talking about whether we would record revenue or not. So situation one, a customer goes to Starbucks and says, I plan to start drinking Starbucks drinks. And Starbucks says, great, this is wonderful, we'll welcome you, but no transaction has occurred and no revenue is recognized. So just because someone says they intend to buy something or they order something, no transactions occurred, so it doesn't get recorded. But on the other side, on the right side, Starbucks gives the latte to the customer and the customer pays money. And that is when revenue is earned. Now we can say the same thing for expenses. We record expenses when we actually incur the expense, not necessarily when we pay it. So we're going to do a couple questions. And again, this is not learning catalytics. They would have been learning catalytics had we had class today. But, okay, first one. So, and this is, again, a question for you to answer in your own mind. If you want, Haley, why don't you put this up? This is just a yes-no. You could, I guess I could even do it. If you want, if you can see the, oh, it is ready to go. Okay, if you want to answer, in the participants window, you can see that there is like a checkbox above all that where it says main rooms. And I'm trying to think of what, okay, there's up there, someone just answered. So there's a checkbox. It's like where you would raise your hand up above that to the very far right. You can click yes or no to answer this question. So why don't we do it that way? Your answers are not recorded. It just gives us a count. And Haley, why don't you make it so that answers don't show? We haven't used this feature for a year, so. Okay, and it's not for credit anyway, but it's just kind of fun. So a customer pays Starbucks $250 on March 15th for coffee to be served at a party in April. Has Starbucks earned revenue on March 15th? Yes or no? Okay, and the majority said yes, the customer has paid Starbucks $250 on March 15th to be served at a party in April. Has Starbucks earned revenue on March 15th? Think carefully here. Starbucks is getting $250 on March 15th. That coffee will not be served or delivered until April. The question is, has Starbucks earned revenue on March 15th? There's a reason we're doing this question. Okay. In this case, the majority is incorrect. Okay. When a customer prepays Starbucks, that $250 is unearned revenue. Starbucks does not earn it until it serves that coffee in April, until it actually delivers the coffee. They're not giving so you would not, Starbucks does not earn revenue until they actually provide the service or provide the product. And this is, they're just simply, the customer is saying, here's my money, I'll pay it ahead of time. And then, so in this instance, Starbucks would recognize the $250 on March 15th as unearned revenue, which is a liability. And then in April, when the party occurs and Starbucks serves the coffee, that's when you would recognize the revenue. Okay. We're going to do one more here. So again, we can, I'll clear the window, I'll clear the count. Okay. Next one. So another question. Again, you can just answer in the window if you wish. Starbucks pays $6,000 on July 1st for store rent for the next 3 months. Has Starbucks incurred an expense on July 1st? The dates are very important here. Okay. Good. Majority are right here. Starbucks pays $6,000 on July 1st for store rent for the next 3 months. Has Starbucks incurred an expense on July 1st? The answer is no. On July 1st, no. The $6,000 is 3 months store rent, so that would be $2,000 in July, $2,000 in August, $2,000 in September. That would be recognized at the end of each month as being used up. But July 1st, nothing's been used up. That's actually an asset called prepaid rent. Okay. So on to our next. Okay. Now, learning objective 3. Now we talk about adjusting entries. John, the Starbucks rent, we would make an adjusting entry on July 31st. It would be incurred throughout the month. Typically, we don't make those adjusting entries day by day, and this is what we're doing in Learning Objective 3, is learning how to deal with prepaid rent. And it would occur, in that case, the expense would be incurred in the month of July, so it would be recognized before we prepare financial statements in July. But certainly, you have an asset on July 1st. But we are going into that, exactly that right now when we talk about adjusting the accounts. Okay, every month, so during the month we have, we record transactions, and then we post the activity to the accounts. And then we get to the end of the month, and we need to do something called adjusting entries. And adjusting entries are made to ensure that revenues and expenses are in the right period. They're made at the end of the accounting period, and they have at least one income statement account and one balance sheet account. They will never include cash. Adjusting entries will, maybe I should just type that one in here. Maybe not. So you will never have cash in an adjusting entry. But adjusting entries are the example, what we just talked about, the prepaid rent. On July 1st, we paid $6,000 for 3 months. At the end of July, we're going to do an adjusting entry to take $2,000 out of that prepaid rent and recognize rent expense. So that's how these, we have to adjust accounts for accrual basis accounting at the end of every period. We make the adjustment before we prepare financial statements, and that's typically at the end of the period. That accounting period could be the month, it could be the quarter, it could be the year, but we make these adjusting entries. And the rest of what we'll do today will focus on these adjusting entries. So, which accounts need to be adjusted? It's going to be your prepaids, your unearned. We're going to go through 3 categories of adjusting entries. Okay, so there are 3 basic categories of adjusting entries, and you would need to know these 3. Okay. There's deferrals, depreciation, and accruals. We're going to do examples of all. We're going to do homework problems, and they basically contain examples of all of those. And we'll do some of those examples today, and we'll do some on Wednesday. I'm keeping my eye on the clock for the exam information we're going to talk about. First one, deferrals. A deferral is an adjustment for payment of an item or receipt of cash in advance. So deferrals are prepaid expenses or unearned revenues. Definitely these are things that you need to know. Okay? Deferrals are prepaid expenses or unearned revenue. So with the deferral, the cash has already changed hands, and now we have to adjust for it. And again, that prepaid rent is an example of a deferral. With the deferral, the cash has changed hands. Now we're doing the accounting for it. Mower guy, the example that I started this chapter with, that's a deferral. It's unearned revenue. Mower guys get $600, cash has changed hands, and then have to perform the service later. So we make the adjusting entries for deferrals. So deferrals are prepaid expenses or unearned revenue. Next up is depreciation. Now, depreciation is a long-term asset like equipment or a building, an automobile, and with this, we allocate the cost of that over the useful life. We have an entire chapter later on, chapter 6 or 7, somewhere in that range, about depreciation and plant assets. So at this point, we're just kind of saying, boy, if we spend $20,000 on a car today and we're going to drive it for the next 5 years, we're going to divide the cost of that, the expense of that automobile over 5 years, not the day we purchase this long-term asset. So plant assets are assets that we use in our business and have a life greater than a year. So we depreciate, we allocate the cost over the asset's useful life. So we're going to touch on this very little in this chapter, knowing that there's an entire another chapter coming up that covers depreciation in a later chapter. Okay, and then our last category are accruals. Accruals are the opposite of a deferral. Remember, with deferral, cash has changed hands first. So the customer pays us in advance, and then we have to perform the service later. That's a deferral. And accrual is the opposite. We perform the service, and the customer says, I'll pay you later. So an accrual is the opposite of a deferral. For an accrued expense, the company records the expense before paying cash. For accrued revenue, the company records the revenue before collecting cash. And I'll pause for a minute if you want to write that down. So the accrual is the opposite of a deferral. For an accrued expense, the company records the expense before paying cash. For an accrued revenue, the company records the revenue before collecting cash. And we're going to go through examples of these. Is everybody with me now? I'm going to pause for a minute, make sure everyone catches up, because I have no one in front of me writing. Typically in the classroom, I'll see someone writing in front of me and wait for them to finish. Good. Okay. Great. You're my pace setters here. Okay. Now, I just want to call your attention to an exhibit in the book, and then I want to get it in the recording in case you don't have the book. Okay, Exhibit 3-6, and it's actually, I've got 2 slides on it, and these slides are in the PowerPoint that you can download from Blackboard. These are examples of the adjustments, the prepaid cash first, prepaid expenses, and unearned revenue. It tells you how you record it first in the left-hand column, in the right-hand column, the adjustments made. And you would also see that that continues on down. Accruals are cash later. So in the left-hand column is what you do at the initial time of the transaction. On the right-hand column is the adjustment you make. I just wanted to call your attention to Exhibit 3-6 to get it into the recording, and also to point out that those summary slides are in the PowerPoint slides on Blackboard. And again, this might make more sense. Yet another, oh, oops, I went backwards. Let me go forward here. Okay. Also, Exhibit 3-7 is another one, nice summary one. If you have a prepaid expense adjusted entry, you'll debit the expense, credit the asset. Depreciation we'll get to in a moment. And we're going to go through all these examples, but I did want to just point out that there is a summary of the adjusting entries. So later on, when you need some kind of summary and you're studying, this is an excellent summary example. And let's see, right after we do the adjusting entries, for some reason the slide's up here, I'll include it. After we do all our adjusting entries, we do something called an adjusted trial balance, and this summarizes all the accounts and their final balances. So we start with the trial balance. We did that last chapter. The trial balance is a listing of all our accounts, debits and credit balances, just to make sure the debits and credits balance. Then we have a column of our adjusting entries, and then we have an adjusted trial balance, which is what we use to prepare our financial statements from. So our financial statements are not prepared until we do all of our adjusting entries. Okay, Haley, heads up here. Can you change the question type to 4 answers, A, B, C, and D? Okay, I'm putting up a question now. Again, the not in learning catalytics, it doesn't count, but you can use the window again. Let's try this, just kind of a review before we get into examples of the different kinds of adjusting entries. What type of account is prepaid rent? So you can use that little, the little check box, or A, it's now changed to an A up above the participant windows, and select what kind of account is prepaid rent. I see a lot of correct answers coming in. That's great. Again, these do not count for credit today. I just wanted to include them so you can kind of see how things are going. What type of account is prepaid rent? This is excellent. Overwhelming majority are getting it correct. Prepaid rent. Okay, I think we're good. Oops, I keep going backwards. Okay, what type of account is prepaid rent? It is an asset. Okay, so prepaid rent is an asset. Let's do one more. Okay, one question before we go on. What type of account is unearned revenue? And again, you can answer that one in the window as well. What type of account is unearned revenue? Okay, overwhelming majority are getting this great and getting it right. That's excellent, and the answer is indeed a liability. Unearned revenue is a deferral, and it's a liability. Okay, it is now 8:38, and I wanted to leave 20 minutes to talk about the exam. And I think I can do another homework problem, but I want to err on the side of caution. I'm going to go over the exam information. If we have time when we're done with the exam information, I'm going to come back to the next homework problem, but I'm going to go to the exam information for right now. Okay, so, exam information. Our exam is going to be from Monday, February 9th to Wednesday, February 11th. All these slides that you're seeing, I did put in an announcement this weekend, so you can go to Blackboard, download these slides if you wish. So the chapters on the exam are chapters 1, 2, and 3. We are covering chapter 3 this week. It is on the exam. So everything we've covered in the class to date is on the exam. Okay, a note, all the times I talk about are stated in Eastern Standard Time. So if you're in a different time zone, you need to make the adjustments. Now, your section of Blackboard, the section that you're in, contains the information about how you'll take your exam. Right now is one of the only times in this class that I'm going to talk about the two sections separately, or the sections separately. First of all, if you're in sections 1 and 2, this is the face-to-face section. So you get announcements from me and they say section 001/002. This is you. This is how you take the exam. You take your exam in the computer lab on the second floor of the College of Business, 9 a.m. to 9 p.m. Now, it's due before 9 p.m., so this is Monday or Tuesday. The lab hours are 9 a.m. to 9 p.m. You have to start by 7 p.m. to be allowed to take it. They will not let you start the exam if there are not 2 hours left in the proctor window. On Wednesday, the last day of the exam, you have to start by 4 p.m. Okay, you cannot wait to start it till 8 p.m. at night or 7 p.m. at night. The exam has to be started Wednesday by 4 p.m. Lines may be long. Go early. And I know we all have a natural tendency to want to procrastinate and wait, put it off, and say we're going to study more. Here's a little nightmare scenario. Last year, the exam before spring break, on Thursday before spring break, there were several exams to do, not just my class, but many classes across the college. Several exams were due. We had warned people not to wait till the last minute to go. And long story short, there was a 3 to 4 hour wait. Okay, and I think that was the perfect storm because it was the Thursday before spring break. People were wanting to leave for spring break early. So everyone in all the sections appeared to show up for the exam at the same time. There was a line from the computer lab down to the classroom all the way at the end of the hall. So don't wait till the last minute to take it. You have to start it by Wednesday at 4 p.m. Keep in mind that if you're in sections 1 and 2, there are 300 of my students taking an exam in the computer lab. The computer lab has a maximum of about 70 computers, so you have to do the math. You can't all show up at 4 p.m. So if you're not a risk taker, I personally am very risk averse, I would go early. There are no appointments. You may wait in line. Again, I am talking about sections 1 and 2 only. This is one of the only times that I'm going to talk about specifics. If you go to Blackboard, if you're not so sure what section you're in, click on Exam Info. It'll tell you where you go to take your exam. Okay. When you go to take the exam in the computer lab, they will have a calculator you can use. You have to use their calculator. They will have an exam equation sheet for you, which we'll talk about in a minute, and they will have scratch paper provided. So when you go to take the exam, you need official photo ID. I'm going to talk about the online students in a minute, so just hold on for a second. Okay, so I'm talking about sections 1 and 2 now. So when you go in person to take your exam in sections 1 or 2, you take a photo ID and a writing utensil. You need a pen or pencil to write on the scratch paper. They're going to provide calculator, exam equation sheet, and scratch paper. Okay, so that's section 1 and 2 only. If you're in section 1 or 2, you have to take the exam in the computer lab. You have to start it no later than Wednesday at 4 p.m. Okay, so, and the exam, by the way, is in My Accounting Lab. Everybody has it in My Accounting Lab. There's a password on the exam. The proctor will put the password in. Okay, now I'm going to leave sections 1 and 2 now. Now I'm moving on to sections 5 and 6. So here's your online students. Okay, now if you're in sections 5 and 6, you take the exam on your own computer in a private location using ProctorU. I have emailed you already about this. You need to check your email. You also, if you don't want to check your email, you can go into Blackboard, click on announcements, and you will see information I have provided regarding your exam. I emailed out to sections 5 and 6 because you have to make an appointment with ProctorU. You will be taking your exam using ProctorU. For more questions about what that is, again, I would urge you to look at that announcement I sent out and the exam info on Blackboard. To take the exam for sections 5 and 6, you need a webcam with audio and high-speed internet. You need to test ProctorU on your system before Monday, February 9th. Again, I've sent emails out telling you how you need to do that. You have to start your exam with ProctorU no later than 4 p.m. on Wednesday, February 11th. Okay, now you need to schedule your exam with ProctorU at least 72 hours in advance. If you do that, there is no charge. If you wait till the day of your exam or the day before your exam and you don't have an appointment, they will charge you a convenience fee for on-demand testing. But as long as you make your appointment ahead of time, you can do that now. Again, that announcement I sent out had all the information. I see that several students have already made their appointments. I'll give you a hint too. The sooner you make the appointment, the better your scheduling times are, because they can't accommodate everyone at 4 p.m. on Wednesday. So if you're particular about when you take it, you have to, the earlier you go into schedule, the better. You can actually schedule all 3 exams for this class right now. You can go in online and schedule exams 1, 2, and 3. So there's that. You are allowed to use a non-programmable calculator, and then you can have blank scratch paper, and ProctorU will provide an exam equation sheet for you to use. It'll be in a PDF form. It will match, and we'll talk about this exam equation sheet in just a minute. So if you're taking it, if you're in sections 5 and 6, you have to take the exam on your own computer in a private location. You can't go to a coffee shop. You can't go sit in the middle of a library. There's people coming and going. You have to be in a private location. So a private office, your home, just somewhere where there's not other people around. You will have to have a webcam and audio. And again, I sent information out about this. So now I'm going to leave the individual, and I'm going to exam basics for everyone. Okay, so now we're back to everybody. So we have sections 1 and 2, take it in the computer lab. Sections 5 and 6, take it online using ProctorU. You both take it using My Accounting Lab. Exam basics. So here we go. There is a time limit of 120 minutes on the exam. The average student, and I use that quote marks here, it takes about 45 minutes on this first exam. That does not mean only allow yourself 45 minutes. Allow yourself 2 hours in case something goes wrong. Do not book so tightly. Do not go into the computer lab or on ProctorU and say, well, I've got an appointment in an hour. She said I could do it in 45 minutes, because something's going to go wrong. So make sure you allow yourself plenty of time. On the exam, there will be 3 or 4 exercises, just like from your homework. They make up about 25% of the weight of your exam, and then there's about 22 to 28 multiple choice questions, which make up about 75% of the weight of your exam. Okay, now, during the exam, you will be provided an exam equation sheet. I struggle with what to call it. An exam note sheet, exam reference sheet. It's already filled out for you with some content, so you don't need to memorize for the exam. You can see this exam equation sheet anytime before the exam by clicking on Exam Info in Blackboard. You cannot bring your own notes to the exam. Okay, you only are permitted the sheet that Haley and I have created. Now that sheet that we've created is on Blackboard. You can also get to it. I'm giving it to you ahead of time so that you can use it for studying. It is at http://tiny.cc/exam1notes. And this sheet will be provided during your exam. If you're on ProctorU, it'll be a PDF that they will push out to you. Okay, Jessica, how does ProctorU work? You need to go on to Blackboard under Exam Info, and that information is there. Okay, so just go to that. It'll tell you there's a little video you watch. You can also call them with questions you have. Okay, so this exam equation sheet, I've provided basic information on the sheet that you don't have to memorize. So I would urge you to download it ahead of time so you're familiar with what I'm going to provide you. And one of the things I provide you are the debit credit rules. There's other things I've put on that So know that that is what you'll be provided with to take the exam. You will not bring your own note sheet. Okay, now, next, this is housekeeping. Don't rely on the ending time in My Accounting Lab as time due. Okay, you have to start the exam by 4 p.m. on Wednesday, February 11th. My Accounting Lab does not have the correct ending time. There's a reason for that. I'll tell you real quick what it is so you know why. Let's say you were taking the exam and you start the exam, your clock ticks, okay, and something really odd happened, like there was, or you were about to sit down to take the exam. For some reason you waited until 3:50 p.m. and there was an enormous fire and the computer lab had to be evacuated, and then you came back to take it. If I had the ending start time on My Accounting Lab at 4 p.m., I can't change it on the fly. So I have it 9 p.m. only simply for my own judgment for emergency use if I hard-coded it and I'm not able to adjust it in the case of an emergency. That said, I don't adjust it. You have to start your exam by 4 p.m. Okay, now, sections 5 or 6. If you're listening to this, you probably knew Okay, I'm going to jump over to John's question. The exam instructions say no other windows are allowed to be open. ProctorU is giving you the PDF document, so they absolutely know that that one should be open, but no other windows than what is permissible for the exam. Okay, so sections 5 or 6. If you're trying to schedule your exam and you can't find a time slot, meaning maybe you waited until the day of, call ProctorU. The phone number is on Blackboard. If in doubt, call ProctorU. Okay, I'm not going to be able to help you with scheduling for ProctorU, and on the date of the exam, you can't schedule it online. You're actually going to have to talk to a person. Typically, when you call them, you have to leave a phone number, and it goes to voicemail, and they will call you back. Okay, there is not a curve on the exam. Exam will not be curved, so just know that. Okay, that's a common question I get. Some basic exam rules, and these are important. No cell phone visible ever. Do not have it laying beside you. Keep in mind that when you're taking the exam, it's recorded. It's recorded in the lab. There are cameras in the lab recording the entire exam. If you're taking it at ProctorU, it's recorded. A cell phone visible is grounds for 0 on an exam. No talking or texting. Obviously can't text if you can't have your phone out. No emailing during an exam. This is just like if you're sitting in front of me taking an exam in the classroom. Do not leave your computer. Do not get up and walk away. Respond to the proctor if he or she has questions. Okay, next one. No other windows open during the exam. You cannot be Googling answers for the exam. During the exam, you have My Accounting Lab open. You can also, if you are in section 5 or 6, your exam equation sheet is provided you in PDF form. Obviously, you need to be able to use that. ProctorU is providing that to you, so no other windows open during the exam other than those exam-related windows. Of course, if you're taking it in the lab, you have a sheet of paper. If you're taking it with ProctorU, you have the one PDF document open. Okay. There are no notes other than the exam equation sheet provided for you, other than blank scratch paper. So you'll have blank scratch paper no matter where to note calculations you're making. Okay. Important sections 5 and 6. You have a little window on your screen that will have your proctor in. You have to submit your exam before closing the ProctorU window. If you close the ProctorU window before you submit your exam, I'm going to get notified and you're going to get a 0 on the exam. You have to submit your exam. Rule of thumb, ask your proctor if you can close the ProctorU window. Ask them before you do it. Don't just close it. So if in doubt, talk to that proctor. They're there to help you. And please, 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 it doesn't happen every semester. It probably hasn't happened for 2 semesters now. I've played with people. If you violate any of these rules, I have to report you to student conduct. I don't want to, but it's part of the rules for my job that if any exam protocol is violated, I have to report you to student conduct, and it breaks my heart. But at the same time, I have to do it. It's not fair to the people that are following the rules. So please, please, please follow the rules. They're fairly simple. You know, don't talk to people, don't have your cell phone out, talk to the proctor, ask the proctor if you have questions, don't close the proctor window if you're on ProctorU. Detailed exam information. No, I'm looking, Haley. I'm just gotta read. Okay. Yeah, you can use two monitors. That's no problem at all. You just can't have other things open. They don't care how many monitors you have. Okay. Okay, detailed Blackboard. Blackboard has exam info on the exam rules, so reiterating what I just stated and how to prepare for the exam. And we're going to come up with that. Let me go through. Okay. Do your practice exam so you know the content. You can do it up to 5 times. Use each one of those wisely. Usually your exam score will be highly correlated with that practice exam score. Okay, really important. If there is any issue during your exam, it is your responsibility to contact me immediately, regardless of what the proctor tells you. If the proctor says, oh, I'll contact your instructor on your behalf, you don't have to. No, that exam is more important to you than to that proctor. It's your exam. It is your biggest priority then. You need to contact me. Do not rely on a proctor. I don't care if you're taking it in the computer lab. I don't care if you're taking a ProctorU. If there's an issue, I need to hear from you right away. Okay? And we can solve just about any problem, so contact me. Don't wait till the last day to take the exam, especially don't wait till the last few hours. You have to start your exam by 4 p.m. Do not wait till the last day to test your equipment with ProctorU. Do not wait till exam day. That just adds all kinds of stress to your exam day. Okay. No makeups on missed exams. Okay. So you need to take it on time. Okay. Now, one of the most common problems that I see when people are taking the exam is they don't remember their My Accounting Lab login. So what you might want to do, because especially if you're not taking it on your computer, if you're taking it in the computer lab, you may want to make sure you know that login information. If you sign in and it says you don't have an account, that means generally you're trying to use a different username. You have to take the exam in the location for your section. You don't have a choice between the computer lab or ProctorU. Your exam will not open in the section you're not registered in. Okay. There is an exam info quiz. The exam info quiz is a few multiple choice questions. It's available starting today at 11 a.m. It covers exam information about the exam and what we're talking about right now and what's under exam info on Blackboard. And you get a maximum of 2 attempts. The score is your average of all your attempts. That's the exam info quiz. That is due this Saturday. So you've got homework on Chapter 3 and the exam info quiz due this Saturday. Okay. Saturday, February 7th. Okay. And then there is a practice exam in My Accounting Lab. Practice exam 1 is in My Accounting Lab already. It's available from yesterday through Wednesday, February 11th. It has to be submitted by 9 p.m. It counts as a quiz. It is absolutely required. The score on the practice exam is a maximum of 5 attempts. It is set up similar in format to the exam. It's meant to let you have practice at taking the exam. There is no time limit on the practice exam, but remember the exam itself has a time limit. And on the practice exam, you have the help me solve this, etc., but those are not on the actual exam. So the practice exam can be taken up to 5 times. Your score is the average of all attempts. This is the single biggest thing you can do for the exam is make sure you know the information on your practice exam cold. Okay? You've got to be able to do it and do it efficiently. We're coming to the end of our time, so just wanted to point out the exam info quiz is due this Saturday, maximum of 2 attempts. The practice exam counts as a quiz, and it is due by Wednesday, February 11th, maximum of 5 attempts. Okay, we have come to 9 o'clock, so we're technically done with class. Any questions? I'm going to stop the recording now, but I'll still hang out for a couple minutes just for any questions. If you have any questions, type them in the chat room. I will also take questions